2, 1, action. Goddamn. 3. Hey, what's up everyone? My name is Anthony.
And I'm Samantha.
We're both realtors here in California where we help people all over the state buy and sell homes.
In this video, we will go step by step through the process of buying a home.
We understand that the process may seem daunting and a bit scary, but really, it's a simple procedure if you know what to expect and you employ the right people to help you along.
Our job as realtors is to make sure the housing market flows, so we will make it as easy as possible for any eligible buyer to buy or sell a home.
Since investing in real estate is one of the safest and least volatile investments, it's important for anyone who wishes to be financially independent to understand how buying and selling property works.
Owning property that increases in value over time will give you equity, which is money that you can use to purchase more properties, pay up any debt, pay your kids' college, you name it.
If that property was bought with a loan, the longer you have that property and pay off the loan, the more equity you get. Which is why buying is always better than renting in the long run, because the money you pay each month when you buy goes directly to your interest and principal, which in turn gives you more equity. But when you rent, you're only giving the landlord more equity, while gaining nothing for yourself other than a place to live, which buying would give you anyway.
Now the first person you're going to want to speak to in the buying process is a lender.
A lender is obviously someone who will be loaning you the money for you to buy your house. These loans are called mortgages, and there are many different types of mortgages offered by many different types of lenders.
The most common lender is a bank, so usually whomever you bank with is a good starting point. Start off by going to your bank and asking for a mortgage pre-qualification. This is a quick, no-commitment way of finding out how much you can afford.
The best mortgage terms, meaning low interest rate and high purchasing power, are reserved for those with the best credit, meaning 750 and up, and the best incomes. Now, most of us can't help our incomes from being any higher, but we can help our credit by paying off any high interest debt and by not applying for any more credit lines during the home buying process.
The other factor in securing a good loan is your down payment, which is the money coming straight out of your pocket at the start of the loan's term.
Government loans, like the FHA loan, only require about 3.5% down. So in other words, if you want to secure a $700,000 FHA loan, you would only need to put $24,500 down. Typically, the more you put down, the better terms you get. And if you put at least 20% down, you won't need to get private mortgage insurance.
Private mortgage insurance, or PMI, is a safety net. They will step in and pay your mortgage if you can't for any reason. If you're unable to put down 20% up front, you're considered a riskier loanee and therefore have to get PMI. If you're able to put at least 10% down, your PMI can be canceled after 11 years. However, if you have to get an FHA loan where you only put 3.5% down, your PMI can never be canceled.
FHA loans are the strictest in this regard. Also when it comes to inspections and the condition of the home. This is why I recommend people get conventional loans if they can qualify for them.
That means having a strong income for your area, a credit score of 650 or higher, ideally 750 or higher.
Once you get pre-qualified, you get a general ballpark range of how big of a loan you can get. If you find that your loan is too low for the areas you want to live in, you're going to have to increase either your income, credit, or down payment.
If you think it's a good budget, then commit to being fully pre-approved by your lender. This is a more in-depth process and will give you a more solid number.
Once you're pre-approved, the next step is to come talk to a realtor like us.
A lot of people think they can look on their own on websites like Zillow, Redfin, or Realtor.com. And those are great resources. However, you'll find that in those places the listings don't tell you the full story.
In fact, Zillow and Redfin are technically real estate brokerages. That makes them no different from RE/MAX, Coldwell Banker, Compass, and the rest. So in reality, you're going to end up using a realtor anyway.
Typically what happens is you go on Zillow.com, find a house you like, you make a call, and instead of being connected to the listing agent for that home, you're connected to one of their agents.
This is normal, but it's better to work with a realtor that you like and trust rather than one that Zillow wants you to work with. But in any case, realtors have access to a listing service not open to the public, where we get more details on properties.
The special listing service costs us hundreds of dollars. On top of that, we have errors and emissions insurance, a working relationship with the most knowledgeable people in the field, And all of this will be put to work for you, the client. This is why it's so important to use an agent.
Once you find a realtor you like, and I want to stress that you should pick the one that you vibe with best, you begin the house hunting process. Now, I say that you should pick the one that you like best and not the one with the most impressive sales numbers or even the most experience, because if you can't get along, it won't really matter.
The realtor-client relationship is one that requires a lot of trust in each other and a mutual understanding of your wants and desires.
Yeah, so if you contact the agent with the most sales, but it turns out they work in a neighborhood that doesn't really suit you, more than likely you're going to walk away feeling dissatisfied with your purchase.
Or maybe the top sales agent does not work afternoons and that's the only time you're available. You never know how compatible you are with someone if you only look at the numbers.
Now, moving on, with a fully underwritten pre-approval letter in hand, you can submit offers on all the homes you like. And you can start making a list of your wants and needs.
In fact, some realtors won't even work with a client who isn't already underwritten. It is a crucial step in buying a home.
That's why it should be done as early as possible during the home buying process. This is the major leagues, and a fully underwritten pre-approval letter is like your shining minor league career. It proves that you make enough money, you know how to manage it, and that you could be entrusted with the next level above renting, which is buying.
Once you find a home that satisfies your list, it is time to submit offers. At this point, it is crucial to go all in on the homes you like. In a competitive seller's market, there is an abundance of buyers, but not enough homes to satisfy everyone's wishes. Sellers are seeing their homes go quickly and are able to solicit multiple offers. You as a buyer only get one chance to submit an offer, and you have to make sure it's your highest and best offer, or you run the risk of not securing the home.
Inversely, during a buyer's market, which we haven't really seen since the 2008 recession, typically there isn't enough money going around in the economy, so people are more likely to sell off their assets, including properties. So as a buyer in a buyer's market, you're one of the few people with money. So you can get really picky about which house to buy. There's typically a lot of houses on the market. You can even lowball sellers. Only problem is usually in a buyer's market, banks don't give out good mortgages. Interest rates are really high. So in that scenario, you likely need a lot of cash.
Once your offer is accepted, we can celebrate a bit, but the job isn't done yet. A buyer will be required to put down an earnest money deposit. This is typically anywhere between 1% and 3% of the total purchase price, and it is due within 3 days of signing the agreement. You will also need to get your lender a copy of the earnest money deposit and of the signed purchase agreement.
Yeah, that's right. And if you're self-employed, your lender is going to scrutinize you even more. They're going to ask you to submit proof that your business makes enough steady and stable income to make payments throughout the duration of the mortgage.
At this point in the transaction, we are moving on to escrow. Most people refer to escrow negatively, but it can be a smooth and simple process if you come fully prepared and you're working with a realtor that you trust and can communicate with clearly.
Yeah, during escrow, we need to actively manage all final steps so that we make sure that the transaction closes smoothly and everyone gets what they were promised. This means there needs to be constant communication and a lot of trust because information needs to flow effortlessly. This also means that you need to have all final documents ready to submit to your lender, along with the final inspections and a final appraisal for your lender as well.
If you're in a buyer's market, you can use the findings from your inspections to leverage your offer and make the seller credit you for any repairs that the inspections call for. However, if you're in a seller's market, this strategy won't work because the seller will probably have backup offers and will not be willing to credit you anything. In this case, inspections are only useful for you to make an informed decision on whether or not you want to purchase that home.
Yeah. And inspections and a final appraisal are part of what we call the closing costs. Closing costs also include things like title and escrow fees. Once all the closing costs are paid and everyone is allocated what they're owed, escrow effectively closes.
Depending on your proposed move-in date, you can take ownership as soon as escrow closes. Some sellers may ask for a rent back or paid time before moving out, usually because of their work or their children's schooling. But it is never a good idea to postpone taking ownership for longer than 3 months because you open yourself up to adverse possession.
Adverse possession is simply when there is someone who takes up residence somewhere against the owner's wishes or is in direct conflict with the owner. So this means squatters or combative tenants that go against the owner's wishes. In the case of a rent back, it would be the latter, because after 3 months of paying you rent and accepting rent, there's an implied month-to-month lease agreement in place. This means that if they don't want to leave, you have to go through the entire eviction procedure, which takes anywhere between 5 to 8 weeks or more sometimes to complete. So if you don't want to deal with that, do not deal with rentbacks.
That's right. And as for squatters, well, we've all heard those horror stories, and we can speak more about it in a later video. But for now, you need to be aware how to protect yourself from them. You need to make sure to record your deed in the county that the home is located in and pay your property taxes consistently. This is the only way to ensure there is no doubt with the lawful owner of the houses.
Yeah, and the title company will deal with recording the deed, but you need to make sure to pay your own property taxes.
And that's pretty much it. Now you can celebrate with a housewarming party.
Yeah, and without having to worry about what the landlord has to say. You finally get out the place that you can call your own, and you get to grow your net worth at the same time.
Like Mark Twain said, buy land. They're not making any more of it.
Yeah, that's true. Or in this case, land with your dream house on it already. But that's pretty much it, guys. We really hope you enjoyed this video and learned something along the way as well.
And if you would like to see any more step-by-step breakdowns like this, please like and subscribe. We work full-time as realtors and primarily focus on that. But if we see that these videos are being beneficial, we will definitely spend more time on this.
Definitely. So let us know. Comment down below. Until next time, guys.